So let's spend some time on India, because the critical question from the perspective of all those watching is, what impact does this have on India's growth? Let's just spend a moment on growth and then we'll deal with regulatory cholesterol and what we can do in terms of cleaning up our act. But in terms of growth, a lot of economists I've been speaking to are knocking off at least half a percentage point from India's growth, but some suggest that maybe it won't be as bad. What's your reading?
I think it may not be as bad for a separate reason, which I think that economists don't quite calculate, because economists look at through the trade, the classical mechanism. But the other point, which is what I've written about in my earlier pieces as well, is the amount of money that America sucked in, right? So all the capital in the world was just going to America this decade. And if you look at the Indian market too, or India in general, capital inflows were pretty poor into India.
Foreign capital inflows.
Foreign capital flows into India. Even FDI had slowed down, but especially stock market flows had dried up over the last couple of years. I suspect what can happen in this new environment is that India could attract greater capital flows over the next couple of years. Emerging markets in general could attract more capital flows, and the dollar also could be weaker, and a weaker dollar is generally a more conducive environment for emerging markets and other countries in the world, because it promotes more capital flows. So it's possible that some of the negative shock from trade, which comes because of America's higher tariffs, could be offset by more capital flows coming into countries such as India.
If you like the video, do like, comment, share and subscribe.